Once upon a time, the Solana blockchain was known for decentralized finance. That has changed after the crash in 2022. Since then, it's all about Memecoin trading, specifically trading of Pump.Fun meme coins. The Pump.Fun ecosystem has seen several iterations over time. It has changed the way it's set up. It initially was all trading via Radium, then it launched its own decentralized exchange. We can't discuss Solana without discussing Pump.Fun as well. But let's first have a look at the total value locked, at the capital that's currently on the Solana chain. This year was DeFi summer, when decentralized finance was all that Solana was about. Then subsequently came the crypto winter. During that winter, FTX collapsed. FTX was a big supporter of the Solana blockchain. And then came the revival with Memecoin trading. This now is the TVL, the total value locked measured in US dollars. Here we see the same measured in Solana. Now, why do we want to look at the capital measured in Solana? Because this way we can see how much activity is there on the blockchain. Is Solana just used to buy and hold to invest in, or is there ongoing activity in the different protocols? By looking at the TVL measured in Solana, we take away the price fluctuation of Solana. And a lot of the assets on the Solana chain are tied directly to SOL. Now, the growth was quite constant up until April of this year. So in the last 6 months, we have gone rather sideways. Now the question is, will the long-term trend prevail, or are we going to see the turnaround again? This is a critical moment for the ecosystem. We'll get a decision in the next weeks. Let's have a look at a few activity metrics. Over here, we've got the number of transactions over time on Solana. This tends to not necessarily grow as quickly as the price, which is a hint that people tend to just buy and hold Solana over time. They don't just buy Solana in order to use it on the platform. Here's the chain fees over time. This skyrocketed when the Pump.Fun ecosystem was more active, and since then has stabilized on a lower level. Here's the app fees. This has stabilized on a slightly higher level, but also peaked at the beginning of the year. Here's the app revenue, a very similar picture. And here, and that's a chart I do not like, is the number of active addresses. So how many wallets are currently being used on the Solana chain? This tends to trend downwards, indicating that any short-term price appreciation we see is not necessarily organic, because many people become active on the chain again. It might be more short-term in nature. It might be more speculation and leverage. But more on that in a second. Trading of the Solana token itself is growing, both on the perpetual futures, but also on the decentralized spot exchanges. Due to Pump.Fun, due to the Memecoin launchpad on Solana, we have seen a lot of newly created tokens. That token creation has slowed down significantly. We're seeing here new token creations based on blockchains. And have a look at this. Solana was dominating this across many blockchains. Once we take Solana away, we've got only the base chain. Base also tends to shrink now. This is mainly virtual protocol AI agents. Once we take that away, we are left with BNB being the leader. Now, this is a very long-term chart. It starts in 2022. And we can clearly see that outside of the massive meme coin bubble, that the token issuance didn't really grow that much across blockchains. Here are the newly created tokens only on Solana. Again, if we take away Pump.Fun and if we take away the Radium launchpad, and then we also remove Pump Swap, there isn't that much of a boom and bust cycle anymore. My main problem when looking at this data is that it's very hard to distinguish what of this is organic growth, what of this is manipulation that's currently unwinding, how much of the trading on Pump Swap is wash trading, how much of this is organic. We only get a hint when looking at charts like this here. This is the number of weekly swaps on the Solana chain. There used to be only around 100, 200,000 swaps per week. That then grew into the tens of millions. But have a look at this. This is the number of bot transactions versus person transactions. Once we remove the bot transactions, we saw the peak at the beginning of the year at around 100 million swaps, and that declined by 50%. And it looks like the momentum is quite strong. We might shrink even further in the number of actual organic swaps. Recently, with the launch of Pump Swap, we have seen a massive inflation of the Solana decentralized exchange trading volume. Have a look at this. Once we remove the Pump Swap activity, there is much less growth compared to all that inflated trading through the platform. So really, we can't look at Solana without looking at the Pump.Fun ecosystem as well. Since launch, Pump underperformed Solana slightly by 31%. We are recovering those somewhat, and that's because of the buyback program. As there's more trading happening through Pump.Swap, the fees generated get used to buy back Pump and stabilize the price. In the last 24 hours, we saw 9.5 billion of trading volume on the Solana chain. Of that, 7 billion is Pump Swap. And so fundamentally, I don't like to look at US dollar charts for anything because there is the macro environment. As in, when Bitcoin goes up, then Ethereum goes up, then Solana goes up, the Pump token goes up as well. There's all of that correlation. When Bitcoin crashes, all the rest crashes as well. So really, when we consider should we buy Solana over, say, Bitcoin, we have to do the direct comparison. Is Solana outperforming Bitcoin? Do we get more return for the additional risk that we take by buying Solana over Bitcoin? And so I very much prefer charts like this here, Solana relative to Bitcoin. Unfortunately, since the end of 2021, Solana is not doing better than BTC. It underperformed by 57%. This peak here is in September of 2021. And interestingly enough, since then, the total value locked measured in US dollars for Solana went up. Measured in SOL tokens, it also went up slightly. Yet the price didn't do as well compared to Bitcoin, right? This doesn't look like much, but still, it's 57%. Had you invested in Bitcoin at this peak, you would have more than double the capital now. There's two things I don't like about this chart. First of all, the long-term underperformance, but secondly also that we are quite high on this potential risk versus reward setup. When we look at Solana relative to all of crypto, so the Solana dominance, we are in a somewhat more stable range. Bitcoin tends to outperform most altcoins most of the time. Solana's relevance within all of crypto is also slightly declining over time, but that's not really the major issue. The major issue, again, I think, is that the potential outperformance is only 40% versus the potential underperformance being 80%. Relative to the others market cap, so relative to all other altcoins, Solana tends to outperform long term because most altcoins are very highly inflationary. So they've got more and more tokens hitting the market, the insiders, the press, prices of most smaller alts, and so Solana can long term outperform. But again, this is very long term. These crashes are very significant as well. If the market goes risk off, which I'm not saying it will tomorrow, but during a contractionary period, Solana can underperform pretty much everything else. And those drops are 80 or 90% in magnitude. This year, Solana relative to Bitcoin is a drop of 87%. What I find fascinating is how quickly the perpetual futures market is growing, as in the bets on the price. Not so many people are buying spot anymore. Most people just bet with leverage on various assets. And Solana has seen a very quick expansion of bets on its price, much quicker than Bitcoin did. This is the trading volume on the perpetual futures on Solana. The price today in US dollars is at very similar levels compared to 4 years ago. Yet the trading volume on Solana perpetual futures has roughly 4 to 5x'd. There was a recent massive liquidity shakeout. You might remember that, a flash crash across the board. The long side got liquidated pretty much entirely. That caused a spike in the negative funding rates that has now normalized. But despite that contraction in open interest, we've still got 8 billion left. So it fell by roughly 50%. We are recovering now. It's still much higher compared to where it was 4 years ago. And so there's much more inherent leverage in the price. When perpetual futures are unwinding, it has a direct impact on the spot price as well. This was the flash crash of Solana. Solana went down by 24%. Most altcoins went down by 50% or potentially even more. The Trump token, for example, went down by 75%. As an altcoin, I think Solana is the better choice compared to all of those smaller, lower tier alts. However, relative to Bitcoin, I'm not sure how well it will perform, because still Bitcoin gets all of those acquisitions through the treasury companies, through the ETFs. I see this to a much smaller degree for Solana. There are Solana ETFs, but they don't have that much demand. Really, what's keeping up the Solana price long term is more and more bets on the price. And I think this will likely continue. It's not more adoption that's pushing up the ecosystem. The number of active addresses is coming down, but there's more and more financial engineering, more and more leverage that pushes up Solana. Again, the risk is, of course, that that leverage might unwind at one point and that then Solana underperforms the rest of crypto. I'm not sure if the current risk versus reward justifies buying Solana for the medium term. That's, of course, a different story for relative valuation trades, right? If we want to be delta neutral, if we want to bet on falling prices of altcoins on the Solana chain, we might buy Solana, go long Solana in order to cancel out the market movements. I'm not talking about that. Buying Solana for that case, to bet on falling prices of other altcoins, makes sense. But buying Solana just naked, hoping that it will outperform the rest of the market over the next year or two, is a quite risky game. Because again, the momentum is currently not on our side, unfortunately. Every year, Solana tends to underperform Bitcoin by roughly 14%. Now, most people try to beat the market by reading the news or by following the narrative of the day, but I don't think that that's a good approach long term. Most people just follow their gut. I think it's better to use statistical data analysis. Try to figure out what kind of rules worked in the past that might continue to work in the future. So you might know about this. I have back-tested moving averages for Bitcoin to try to find out when are we bullish, when are we bearish. It's a trend following strategy. We buy whenever we are above the moving average. We sell whenever we are below the moving average. Now I've back-tested all moving averages from the 2-day all the way to the 200-day. And the 125-day simple moving average and the 44-day simple moving average are the ones that historically work the best. That's the two moving averages we see plotted over here. So the 125-day is the line in turquoise, the 44-day is the line in orange. Now have a look at the historical performance versus buying and holding Bitcoin. So we are betting on rising prices whenever we are above. We're betting on falling prices whenever we are below. This is the 125-day. Buying and holding Bitcoin would have given us this performance here in white, but the backtest gave us the performance in turquoise. Here's the same for the 44-day simple moving average. We can see, first of all, that we outperform long term, but also that our volatility is lower, as in the drop from top to bottom is less compared to buying and holding Bitcoin over the same time period. Now, when we've got an approach that tends to perform more and still is less volatile, still drops less compared to just buying and holding Bitcoin, why don't we lever this up? So I tried to find the optimal leverage. If you go long, the best leverage is 2.75. If you go short, the best leverage is just 1x. If you have the same leverage for both directions, long and short, then 2.25 is the best. But in general, I think it's better to have different leverages to go harder on the long than on the short. So this is the 125-day simple moving average. If we only go long, we never go short. So whenever we are below the moving average, we're just in cash, we're just going sideways. And here is the short side. So we never bet on rising prices of Bitcoin at all. We are only betting on falling prices. And of course that underperforms buying and holding Bitcoin. But still, it shows us that even though in a long-term appreciating asset, if you can only bet on falling prices, we can still make some return. And so let's say we use the 44-day simple moving average, but we don't just have 1x leverage. So that's that. But instead we lever this up with 2.75 on the long side, with 1x on the short side. This is much better than just going 1x. And again, this is a logarithmic scale, right? So each horizontal line here is at 10x from each other. So that's my preferred medium-term approach for Bitcoin. I just look at where is the price currently relative to those moving averages, and then I position myself in the long or short direction. And because this might be cumbersome, this might be complicated for a few people to always enter and exit those trades, I've also opened up a capital trading pool for the premium members. They can simply just deposit capital and then I will execute that exact strategy and I won't deviate from that strategy. So if history is any indication, we might get performance that looks similar to that over time. At least that's the idea. we don't want to just follow the news or act based on gut fear. We just follow rules that historically worked well. This was a very quick rundown, but there's way more details in the tutorial section of Premium. The link is down below. It's bitcointrader.com. But I'm also sharing my personal view on the market regularly. So every 3 to 4 days, I publish a Premium update video where I share what kind of trades I open, where I share what kind of positions I take. There are more details regarding the strategy in Premium. There are dedicated videos for that. There are also dedicated videos that explain how to actually run the backtest, how to make those backtests yourself, if you want to do this maybe for Ethereum or for any other crypto asset. And so here is the Bitcoin strategy moving average vault. So that's the trading pool. You just deposit some money into that pool and then I will execute those trades automatically for you. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you do not like Premium, just message me within 1 week and I will refund you 100%, no questions asked. A link to Premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.